Gold prices coming under pressure. Why? Because of the fresh tensions. I mean, even more fresh because there's been strikes over the course of this weekend. The US launched a new attack on Iran on Sunday evening. Obviously, these are days now of strikes as we've been going over, right? And the whole point of this, why it influences gold, I've educated you guys on this because it forces the inflation trade, fears of inflation. If fears of inflation rising, then we have potential higher rates, higher interest rates. You got to know how to capitalize on this and know the things to look for. This is all I've put out a lot of information on this. And by the way, just before we continue, in the coming weeks, so I'm going to be reviewing applications for my mentorship. So the waiting list is open. You can click the link. You have to go via that link below to apply for that. The waiting list is open, and I'm looking forward to taking on a new wave of hungry students that want to understand how to trade and get practical, me in your corner to drive you towards being able to trade macroeconomics. Anyway, let's carry on here with gold. So gold price has obviously been consolidating. As we said, it was a matter of time before we get the structure resuming and just forcing the price into that next area of liquidity because of the current macro environment, which we've had our finger on a pulse with the rising yields. When you look at yields, obviously elevated, you can see that today, 0.6% we're up there, US 10-year. So yields rising. We've got the inflation fears. We've got oil rising. All of this is weighing on gold because it means potential higher rates. So if we look here at gold, obviously gapping to the downside there, and we're coming to test a key area of liquidity, near-term liquidity now at sort of 40-50, nice and psychological. Obviously, if that gives way, we're likely going to be all these stops that people were taking these longs on. There was people were trading this pullback structure looking for a breakout, and we did get that breakout, but we didn't have that follow through of momentum. And as I said to you guys before, at any given time, when you're trading against the higher time frame and the macro buyers, you're going to get whacked. You're going to get whacked at some point if you're trying to trade against the trend and trade against a macro regime. Stop trying to call the bottom. So anyway, this obviously runs the risk of big drop down into the next area of liquidity, coming down to our key area again, 4K, 3.9K, which we've been calling for. So keep an eye on that. Ultimately, as I say, guys, you know what we're looking for here. As a reminder, if you do want to apply for the mentorship, it's below. If you want to get access to the KenMacro desk, the links are below as well. And I'll catch you on next update.